Welcome everyone to our weekly Forex market analysis call, and this is in preparation for trading for the week of February 19th to 23rd, 2018. Just a quick disclaimer before we get started. Trading is a risky business, so please be careful with your money. All right, so now let's move on to our Forex Factory calendar. All right, so to start things off with, we have a lot of bank holidays here. A Chinese bank holiday, US bank holiday, and for Canada as well, it's a bank holiday. So we don't have a whole lot going on, but we do have Bank of England, Governor Carney speaking. So anything that comes out of Bank of England will be important because they are thinking, or they had mentioned about raising rates potentially in November 2018. So leading up to that, the data that comes out of UK will be important, as well as any comments out of the central bankers will be important because they'll drive market sentiment. So that's important. And coming up in the evening here for Australia will be the monetary policy meeting minutes. So again, anytime there's monetary policy or central banks concerned, especially right now, because a lot of central banks are changing their stance on the monetary policy, these will be very important. So Reserve Bank of Australia has essentially not mentioned anything about raising rates. However, they are one of the banks that we do need to pay attention to because they usually raise rates, especially when Canada is raising rates. So Canada, Australia, and New Zealand, they're all commodity currencies. So they're resource-related economies, and they tend to sort of move in the same direction. So now the focus will be on those other, Australia and New Zealand, to see if they will raise rates. Australia has been reluctant to do that, but if anything changes in the commentary, either in the meeting minutes or in any kind of speeches that they do, that will have an impact on the market. Tuesday, we have ZEW economic sentiment number, which will be important, but nothing really major in terms of news. And all the way to Wednesday here. So this is where our PMI numbers start coming up. PMI is an important number because it's a leading indicator that leads to retail sales and, of course, GDP later on. So this one will be important, even though it is orange. This will be important. And then British pound average earnings index is important because one of the things that the central bank will pay attention to together with the employment numbers are the average earnings numbers. So if the average earnings are declining and the jobs are going up or employment's going up, that's not the good thing. And central bank wants both of those numbers to be going up sort of together. So that will be important. And then, of course, we have employment numbers coming up as well. And inflation report hearings are also on Wednesday here, so that will be important. Very, very important thing coming up would be FOMC meeting minutes. So Fed has said that they are looking at 3 interest rate hikes this year. So we just need to see what the meeting minutes come out as. So these are just meeting minutes. It's not a press conference or anything, but the market wants to see if the Fed is on track to doing something like that, that they're actually, they're kind of following the same stance, or if anything changes. So that's something we'll have to look at as well. So this will be very important on Wednesday. Thursday, we have GDP here for British pound there. And then we have monetary policy meeting accounts for ECB. So even though this is orange, it really should be red because this is the same thing as FOMC meeting minutes. These are very important as well. So these looks like this week we have a lot of central bank stuff, monetary policy meeting minutes. Then we have FOMC. So, and then we have ECB. So very important to make sure that when these meeting minutes come out, so they're not as bad as when they actually have the press conference, but they are still important because they will drive market sentiment. So core retail sales for Canada, that will be important as well. Crude oil inventories, again, they will be important for US and Canada. So that's something to pay attention to. Retail sales number will be important for New Zealand dollar here, will usually impact New Zealand dollar, especially in the Asian session because, later in the New York session leading into the Asian session because liquidity tends to drop. As a result, we could see a move in New Zealand dollar. Finally, on Friday, we have CPI numbers. Again, these are inflation numbers, and inflation is one of the things that the central banks track. So we do need to keep an eye on the CPI numbers here as well. All right, so that's it for the news. So now let's take a look at our charts. So in terms of Euro here, we've been trading in a range. So for the last 1, 2, 3, 4 weeks, we've been in this range at the moment. So this one, I am going to treat this as a range-bound market, and I will be looking at it as a range-bound market. So what I'm looking for is when price gets to the top at 125.30-ish level, looking for price to drop, and when it comes into the bottom, a 1.2220-ish level, I'm looking for bounce off of that. So overall, for the last 4 weeks, Euro has been range bound. So I'm looking for price to stay range bound. As we can see, we had a very bearish day on Friday. So price has pushed back here. So now going into the week, we could see one of these and then a drop. So once price comes into the bottom, I'm looking for a bounce off of that as well. So for now, it will be range bound unless something changes. So if ECB's meeting minutes come out and it shows that they're talking about they're cutting back on their asset purchase program, which is the next step that they are likely to do, then this will give Euro a push up, and it could go up. Or let's say the Fed FOMC meeting minutes come out and something changes that changes the market sentiment, then we could see this come out of the range. But until then, I'm going to treat this as a range-bound market. So I'm looking for a potential sell at 125.30-ish area at the top of the range, and a potential buy into this 122.20 area in the bottom of the range there. So my bias is range-bound for Euro dollar. Pound here. Pound has been following this upwards trajectory, and now we've seen a pullback, and we haven't really gone anywhere with this. So it is the close for the week is bullish, but it hasn't broken the high. So in this case, we could, let's see. So it's sort of range bound, but it is making lower highs. But overall, it is in this uptrend. So with this, let's see. So that's sort of where we sit. So what could happen in this is price could go test this level once again. So the bias is bullish to neutral. So we could see price come and test this 137.80 level once again. And we have to see a bounce off or a break of that level, and looking for it to drop then back into this previous support and resistance area, which is also our trend line. So overall, between Euro and Pound, Pound is the one that is stronger at the moment. So we could see the Pound push up a little bit and then drop. And I'm looking for a retest of the bottom here, 137.80 level. And then if it breaks, then looking for price to come and test the level once again here and basically push up from there. So let's move this a little higher. So the bias here is bullish to neutrals, because I'm looking for a retest of 141.70 level here, and it could go potentially higher. But overall, though, looks like we may be coming down a little bit. So looking for it to push up and then drop back into 137.80. And if that breaks back into 1.3650 level, which will be an intersection of our previous support and resistance, as well as our trend line going up. So that's how I view the pound dollar here. Aussie dollar. Looks like my thing keeps coming back every day. Okay. So with this one is similar to our British pound, where we've seen price go up. It has bounced off of the level here, and now we are back into this support area where it is bouncing off of. So right now it is in that bit of a range. So for this one here as well, the weekly candle close is bullish, which means it can pull up back here again. So this is sort of how I would look at it. We have price went up, pulled back, and now it can go back into this level, back into the support and resistance of 80.37 or almost even into the 80.50 level. And then I would be looking for price to come back and retest this 77.80 level once again. Now, it could go all the way to the high of 81.20. So we have to see which direction it's moving on, because it is finding support here. With the candle close the way it is, I will look for a price to push up first, and then I am expecting it to run into trouble into this 80.50-ish area, and then we could see a drop from there. So that's the base case scenario I'll be working off of, and then I'm looking for it to come and test the 77.80 level once again, and either we'll see a bounce off of this level coming all the way from here, which is what we saw this week, or we could see the move to the downside once again. But overall, the price is making lower highs here. So we have a big high, price pushed back, and now we are seeing it drop. But we could go see this here inefficient move here. This could get filled all the way up, and then we could see a drop for Aussie. So looking for a move up into 80.50, and then a drop from there into 77.80 level. New Zealand dollar here. New Zealand dollar has actually been more bullish than Aussie, just like euro and pound. Between the two of these, New Zealand has been more bullish. So overall, between Aussie and New Zealand. So overall, we are pushing into the highs once again, but we have seen that price has rejected this level several times. So the bias is bullish, but recognizing that we are running into this resistance level, which comes from all the way over here. So with this, what we need to do is how price reacts at this level. We are at 77.50 level. So if the price stays below this level, the way it is, we could see one of these and then a drop. But we do need to keep in mind, it is a bullish close for the week, which means we are likely to see this high challenged once again, 75.50 level. If it breaks, then it is very likely that we will go see price go and test this previous high. And that's where we'll have to be careful. So the bias is to the upside. So I will look for price to go into 74.50 first. And if that breaks, I'm looking for price to go and test the high at 75.50. And then there we could get a double top type of formation. And we may see some reaction at that level, because last time price was here, we did see a drop to the downside. So that is New Zealand. Dollar CAD here. Dollar CAD is staying below our neckline here. So we have this M formation, a double top formation, and price seems to be staying below the neckline. So as long as price stays below 126.80 level, then we're likely to see the price come back into 122.80. And that will be the key. So right now, things are a little, we've seen price do kind of move one way and then the other. So there's no clear market direction at this time, because we saw dollar CAD drop, but it has pushed back up just with all the pairs across the board. We saw pullbacks in or bounces in all of them on Friday. So Friday's move has reversed some of the weekly moves that we saw here. So in this case, the candle close is very neutral, but overall we are making a lower high. So I'm looking for price to move back lower. As long as price stays below 126.80 level, I'm looking for price to bounce to the downside. So this is a bearish to neutral candle close. So the bias would be to the downside as long as price stays below 126.80, and I'm looking for a move back into 122.80 to the downside. Euro Swiss franc here. This one is looking bearish. Price went and tested higher, but it has had trouble at this level, 1.1580 level. So we have seen price kind of close down. With this one, I'm looking for price to move into 1.1450 level and then down to 1.1320. So the bias is to the downside for Euro Swiss franc, and it just seems like it is wanting to drop. So bias is to the downside. Pound Swiss franc. This one is also, with this one, the bias is also to the downside. And we did have a push up into this, but I am looking for price to drop. It could go slightly higher to test this 130-100 level, the bottom of this pin right here, and then drop. But overall bias is still to the downside. It does look like it is weak. So the target here would be a 1.2730-ish level here in the bottom. So the move that we could see with this one would be something like that. But we need to see a break below here for it to continue into the next step. So potential sell that I would be looking for would be 1.3100, and then looking for a move to the downside. Dollar Swiss franc here. This one has been weak. So price was not able to break above this previous support, which acted as resistance. And now we have had a bearish close for the week. So with this one, I am looking for the biases to the downside. So I'm looking for price to move down further. And the target here would be these pins, which is 70-80 level. So looking for a further drop. But we could see pullbacks again. And in this one, this looks like a good level for a pullback. So we could see one of these, or we could see a pullback into one of these areas. So 93.30 level. So something like that, and a retest. So overall, though, bias is to the downside. 91.30 would be the first potential area I would be looking for a potential sell, and then looking for it to go to 70-80 area to the downside. Sorry, 90-80 area to the downside. So 0.9080 biases to the downside. Pound yen. Pound yen biases to the downside. And with this one, I am looking for price to come back into this previous support and resistance area at 147.00. So overall, we were bearish here. After the last week, we did see a drop, and I'm looking for it to drop further into 14700 level. But this is an important support and resistance area. Once price comes into here, as we have seen, it reacted to the downside of over here. And then once it crossed over to the other side, it stayed above that. So I would expect price to have trouble with this area. So the target is to the downside, and 147.00 will be my target to the downside. If it manages to break that, then we are looking into this 144.00. But this is a bigger challenge here first. So 147 is where I am targeting first for the British pound. Pound yen. Euro yen here, this one was more bearish. We had a nice weekly bearish candle close, and we were looking for a follow through on that. We got that. And now I'm looking for price to move lower. Again, do keep in mind though, we are coming into this support here where price has bounced off before. So here we had a move to the upside where we had trouble. And then on the other side, so our resistance became support, and that's the level we are into again right now at 131.50 here. So we do need to see a break of that. Bias is to the downside. So we need to see a break, and then looking for a move lower into 129.20 area. but the bias is to the downside. Okay, Aussie yen. Aussie yen is looking bearish, so looking for price to move lower into 81.60 area. So we have finally managed to break below the support level. So last week our bias was to the downside. We did see that, and now looking for a further drop into 81.60 area back into the bottom here. So the bias still stays to the downside. And dollar yen, this one has been weak and it broke through the previous support. Now we are into lower levels here. So the biases still remains to the downside, and we are looking for, I'm looking for a move down lower into 105.30-ish area here. So last week, based on this here, we were looking for a move lower, which we got, and now looking for a further move to the downside. With this one, we could see one of these moves and price could go and test this level once again. As we can see, this is a strong level here, and I would look for a reaction. So if price does move higher into 107.30, I'm looking for price to react at that level, and it could provide us a potential selling opportunity, looking for a 105.30 area for it to move lower. But the bias is to the downside here. Just a quick comment on all the yen crosses. So the yen has been getting a lot of attention. We're seeing yen strengthen across the board. So all yen crosses, we're looking for moves. We're looking for downside pressure on all the yen crosses, which means the yen is getting very strong. Now, we do need to keep in mind Bank of Japan. Bank of Japan is notorious for intervention. They like to intervene in the markets. Anytime they see Japanese yen getting stronger, they will go and intervene in the market. Basically, what they do is they sell a whole bunch of yen, which then basically creates the selling pressure in yen, which means all the yen crosses will move up higher. So this week, we did hear from Bank of Japan saying they're not going to intervene in the market, but they've said this before, right? And sometimes they can just talk about it and create that move without actually taking action. So that's what I would sort of be watching out for, and paying attention to newsfeed will be very important, because anytime we hear rumors about Bank of Japan intervening, it can be disastrous, because they do not want the yen to be too strong, because Japan is a small economy and they export a lot of stuff. When Japanese yen is strong, they cannot export as much stuff because it becomes expensive for the rest of the world to buy Japanese stuff. So as a result of that, it is in their interest to keep the Japanese yen sort of at a manageable level where they can still have a lot of exports. So that will be the concern going forward, especially if we see yen crosses dropping. So we just have to make sure that position size is, we are managing our position size, because that will become very important, especially if they come into the market and just suddenly sell a whole bunch of yen. It will cause everything to go up. So just be mindful of that. I just wanted to point that out. Let's go on to gold here. There we go. Gold has been moving higher here. Now, this looks bullish, but we are range bound here. We've been in this range for the past 6 weeks here. And price has come into the support level where it bounced off of. So with this being a range-bound move, if we go to the daily chart, this is where we are at the top of the range, and we have a bearish engulfing candle, which means price could come back down here. In this case, usually the type of move we could look for is this, and then basically price moving back into the bottom of the range here. So again, a range-bound market, it will be same as the euro. So price is range-bound. I am looking for price to basically react at this level, 1362, basically stay back into the range. So 1362 level would be a potential sell, or 1363, and looking for price to come back down into 1312 or 1313, where we could see a bounce back into the middle of the range. So range bound for now. Any other questions or comments? That's the move I'm looking for. Basically selling at the top and buying at the bottom. All right, so that's all I have. Go ahead. What question do you have, Nathaniel? Pound CAD. Let's take a look at Pound CAD. Pound CAD is also range bound at the moment. So as we can see, for the last 4 weeks, it stayed in this one, but we are looking quite bullish here. It's pushing up into the high here. So with this one, once the high breaks, then I would be looking for this 178.50 level, but we do need to see the break of the high, because if it doesn't break, then it could just basically become range bound. And the daily close is very neutral here. So what could happen is price could do one of these. So that's what we would have to be mindful of, but it is pushing into the high. So the candle close is very, very solid, a bullish engulfing, and we see that all these candles are engulfed by the weekly close here, which means we could see a push into the top here, into 1.7850 level, but we do need to see a break of 76.60-ish level here first before we go higher. So the bias is to the upside, but with caution, because we are into resistance. So the question that comes here is, what time frame is better for analysis and placing order? Normally on a day-to-day basis, I do my analysis on a daily time frame. And when it's time to place the orders, I tend to go to the lower time frame. I'll check like what the 1 hour looks like and what our 15 and 5 minute looks like. And just because I'm still using the levels from the daily, but I'm trying to get closer to price when placing the orders. All right, so just a last thing here, if anybody's interested in the trade room here, I do offer a trade room where I share my trade ideas, and every night we have daily market analysis calls where we take a look, where we do a similar review and we look at the daily levels to trade from. So we go through all the different crosses and I go over what levels to look out for in terms of placing trades. And then I trade the London session 3 days a week, Tuesday to Thursday. And that's when I send out my actual live trade. So when I take a live trade, I post it into the Skype room as well. So when you join the trade room, you'll be part of the members only Skype group where I place my trades, and I show, or basically I say when I'm entering the trade with entry, stop loss, and take profit targets. 2 times we place the trades. One is after the daily market analysis call in the evening, or in the London session. So you could join either one of those. And then we also have a members only webinar every Friday, which is an educational webinar. The cost is $97 a month. But I have created, if you're looking for a lower price point to join the trade room, I also do kind of a semi-annual membership where it's only $67 a month if you join that, or a yearly one, then it is only down to $47 a month. So if you're interested, you can go check out these different different links to learn more about it. All right, so it looks like that's all we have. So you guys have a wonderful weekend. Enjoy the rest of your weekend, and I will see you again next time then. Bye for now.